Hello, and welcome back to Talking Wealth. Today, we're going to be talking about the future of AI and financial advice. I'm not going to bury the lead. We're getting right into it. Artificial intelligence has the potential to do to financial advisors what the comet did to dinosaurs. The financial advice my children get will not be, I don't think, delivered by human beings the same way it is today. So stick around for my conversation with Dave Nadig, but first, a word from our sponsor. Today's episode is sponsored by SS&C's Black Diamond Wealth Platform. Are you an advisor who's looking to streamline operations, improve reporting capabilities, or expand your service offering? SS&C's Black Diamond Wealth Platform is expertly crafted to enable wealth management firms to simplify their tech stack, streamline operations, and better serve their clients. Acting as the cornerstone for all essential functions, Black Diamond drives everything from client acquisition and onboarding to proposal generation, portfolio management, a purpose-built CRM, an interactive client portal, and more, ensuring advisors can confidently achieve their business objectives. To learn how Black Diamond is helping wealth advisors of all shapes and sizes, visit sscblackdiamond.com. I couldn't think of a better person to have on the show today than you, my friend, Dave Nadig, who once held the title of futurist.
I mean, once a futurist, always a futurist, right? I mean, I figure I get a lifetime free pass on futurism.
That's true. Once a Nick type of deal. All right, so Dave, you spent your entire career in the financial services industry. You have deep expertise on a lot of topics. And also, I want to give you a plug. You have an excellent Substack that we could use some work in the name, but it's Nadig.com. So if you want to follow Dave's work, it's over there. Dave, welcome to Talking Wealth.
Thank you so much for having me.
Okay. Today, we're going to be talking about what AI is going to potentially do to the financial advisor industry. But before we get to today, I want to rewind a little bit to talk about the last big, terrifying idea that was going to make advisors disappear. I'm talking about the robo-advisor. Remember those? I'm sure you do.
I think you're overselling their demise.
So, okay, I'm glad you said that because I actually do think that robo-advisors had a profound impact on our industry. I really do. I guess what I'm talking about in the way that they, air quote, failed in the extent that they did just to displace us, I'm really just talking about the mismatch between what was hyped up and what actually happened. So I brought two charts that we could reference. They raised a lot of capital. Betterment raised $385 million, still private. Personal Capital raised $295 million. They did have an exit to Empower. And actually, Wealthfront, who raised $274 million and had a failed attempt to be acquired by UBS or whatever. I saw news today that they are attempting to go public. So not a ton of success as far as like the venture investor point of view. But I want to get your take on this because they did raise a lot of money. Betterment has $65 billion in assets, Wealthfront $37 billion. And they laid the groundwork for Schwab Intelligent Portfolios to come in with $66 billion. Vanguard, the 800-pound gorilla, entered the space, and they have $333 billion in there. So even though they didn't, make us disappear, they certainly changed what we were doing. And that's, what is it, half a trillion dollars? That
half a trillion.
That didn't come to us. That might have otherwise would have.
Or it's $500 billion that's at the bottom of your funnel. Right, or the top of your funnel, right? I mean, I think that's the real message here. It's not so much that robo-advisors failed or didn't get assets or even stole any clients from most financial advisors. What they did was condition a whole lot of investors that there's this base level of portfolio advice that is frankly worth about 20 or 30 basis points, and you can get that pretty automated. And in fact, it will do a pretty decent job on that narrow piece of what financial advice is. Those folks are prime customers for when they actually need advice, because we all know there's a big difference between having $1 million in your Wealthfront account and then dealing with a missed 83B election, or somebody selling a house in California and dealing with the step-up basis and the taxes. I mean, the stuff actual advisors do every day is generally not picking an ETF.
Correct. And I think what we learned is that robo-advisors weren't providing advice. They were doing automated asset allocation. And ultimately, the services that they provide looked a lot more similar. They came to us instead of us going to them. They brought human beings in. What a concept. They brought in other services other than the ETF and the model portfolios. So you're totally right. So, okay, Fast forward to today. And the reason why I look back to look forward is because there was fear amongst some, and I'm not going to lie, in 2013, I was relatively early in my career, and it was certainly, do I have a future in this industry? It turned out to be not nothing, but nothing to worry about in the sense that it's going to be an existential threat. Okay, compare that with where we are today. We've got a chart from JP Morgan, Guide to Alternatives, which shows venture investment in artificial intelligence. In 2020, 14% of all dollars went into AI-related companies. Fast forward 5 years later, and it's 71%. Everybody knows that everybody is going all in, and it's not just venture, it's corporate venture, it's Amazon and Microsoft and all that sort of stuff. So there is a lot of money pouring in here, and the way that it is being ingested or integrated with advisors today is primarily it started with note takers, which are expanding the breadth of their services, from meeting prep to maybe some behavioral analytics. What are you saying on the call? How much are you talking? Where did you pause? Where, all that sort of stuff. And then beyond, it's going to go, who knows what it's going to do to our industry. So before we jump ahead to my grand idea, how do you see advisors or the state of advice integrating with AI today?
Well, as it is right now, I would say it's all over the map, right? So yes, the number one use case I've heard from everybody is using Otter or Firefly or one of the various note-taking services, which are increasingly getting embedded with CRM systems so that you can actually make these things part of your useful ecosystem of managing your clients. That all just seems like a win. And I don't think that that's even remotely unique to financial advisors. I think anybody who has a public-facing, client-facing business should be using them. Frankly, I use them. I mean, it's still a little awkward when you hop on a call and 17 people's note takers are in there and everything. And it still feels a little goofy. But boy, the ability to go back and say, oh, can I get the transcript of a call I had 6.5 months ago? And I don't want to read it. Can you just tell me what happened? That is a huge uptick. And I think that we're going to see a lot of those core sort of office executive functioning type skills automated first by AI because it's really clean. So for instance, using it to manage your calendar, using it to manage what kind of meetings I've got coming up and what kind of prep I need to do. Those are fairly rote formulaic systems that lend themselves really well to being in a walled garden like your Gmail suite or whatever your Office suite or whatever your comm suite is. So that's a really logical progression. And that feels very much like the now. The next bridge there is actually using AI as kind of a co-planner or as a co-advisor, where you're taking, say, the plan that you've got for your customer all ready to go to talk to Mrs. Jones on Tuesday, and you're loading that into a large language model that has been preconditioned to speak financial advice, and asking it questions about, well, what am I missing here? Like they mentioned they want to buy a boat. We haven't really allocated that as separate money. Should we be talking about segregation? Like all those little nitty gritty things that I know are part of a regular advisor conversation. Bouncing those things off against even the current state of LLMs, I think can be really helpful and useful. And then last, I think as a rehearsal agent, as somebody who's a little neurospicy myself, I don't know whether you've seen Nathan Fielder's The Rehearsal, where people who have certain sensory processing issues benefit very greatly from being able to practice human interactions, role-playing stuff, as weird as that is in person. It's not weird with an AI. You can role play a hard conversation about Mrs. Jones' spouse dying for 2.5 hours before they show up in your office. That can be really helpful. I think there's a huge pile of problematic stuff that comes along for the ride, which we can get into.
Yeah.
But for a lot, I can tell you, I think it really is genuinely helpful.
Okay, so financial advisors are going to look very different in the future. But before we get displaced, the role that is definitely going to not exist, and I say definitely, I don't know, who knows, that I suspect is very much in jeopardy is the co-pilot, the paraplanner role.
The paraplanner.
This is a very difficult role to fill because it is traditionally a job that is done by young people. Now, young people need two things. They need training. Most RIAs do not have a training department, so it falls on the feet of the advisor to train them. They also need guidance, mentorship, and a career path and more money, and that falls on management. It's challenging. It's difficult. And then, oh my God forbid the power planner succeeds and the advisor does a great job by them and trains them, then they leave the nest. And then we start from zero. That role and those functions will be done by a computer. I'm going to guess in under 3 years, that role will just disappear from the industry. Agreed?
Yeah, and it's not just in finance. I mean, not just in financial advice. That entry level trained role is disappearing in all knowledge work, right? Yeah. So this is a problem top to bottom. It's a problem in coding. It's a problem in accounting. It's a problem in the legal profession. But yes, it is absolutely a problem for financial advisors. This whole pipeline that would normally be filled with aggressively entertaining 25-year-olds is just going to disappear. That's
the line of the catch-22 line of come back to me when you get experience. Oh boy, that's not great. Okay, so financial advisors. Here's my big fear. And I am not just saying this to be provocative. I genuinely think that there is I don't know how to put a probability on this, a good chance that what I am describing happens in the future. When I say my kids will not work with a human financial advisor, they will be, let's say for lack of a better word, AI native. They will grow up with the internet. It's not going to be AI. It's just going to be their life, right? The same way that millennials and then Gen Zers, it's not social media. It's just whatever. It's whatever it is. Okay. So it's not going to be the robo-advisors. It's going to be agents that look and feel exactly like you and I do, maybe with better hair. You're not going to know. They're not going to care that they're talking to a computer because the computer is going to look and talk like us. It is going to empathize like us. It is going to look the same every time you talk to them like us. And the advice part of it, the actual by the book advice, that part is easy. The empathy part is hard. And I also think that is going to come at a fee of, I don't know, 15 basis points. Now, there is one big obvious hole in this argument that blows this all up, which we can get to, but you're shaking your head as I'm talking. Why is this not going to happen?
Pieces of this are going to happen. Like, there's no question somebody is going to have the business you are talking about, and they will be selling people the services of that business for somewhere between 10 and 40 basis points. I won't argue with that at all. That's just a logical projection path from where we are. You can say the same thing about the legal profession. You can say the same thing about all sorts of sort of interactive professions. Here's where I'm going to push back on this. As somebody who has a financial advisor and has worked with a lot of financial advisors over the years, successful financial advisors, ones who actually build long-standing practices with families that don't break every generation when somebody dies, do that not because they're good financial advisors, but because they build good relationships. And I don't think that we are in any danger of people having emotional and energetic, real relationships with the bot that looks the same. The pull will be there. And people will get bad advice and it will go poorly for them. I'm not saying people won't do it, but it won't be done well because I genuinely believe that the job of financial advice is a human-to-human business. And by all means, let's get all of the cruft out of the way. Let's get the legal stuff and the tax stuff and the planning stuff automated as much as we can, because what that's really going to highlight is the folks on your team who are actually good at their jobs, who are actually good at building those relationships with wealthy families, which is what the job really is. That's the job. That's my big pushback.
Okay, I don't disagree with anything you said. The job of the successful advisor is to build relationships. It's to make people feel good about their current and future financial situation. That is the job. And I don't think that advisors are in any danger of the people that are, 50 plus, wherever the number is. Those people will, for the foreseeable future, probably until they pass, will want to work with a human being. I'm talking about people that don't necessarily see the line. They don't see the blurred line of you're a human, that's a robot. I think it will become so ingrained into the fabric of society that they won't care. The same way that there's going to be like fake girlfriends, which is a whole other scary sort of topic. There will be fake financial advisors, but it won't be thought of as fake. It'll be the same person every time who learns you and can empathize.
I agree that there will be some of that, but what will immediately happen is what happens in every other service industry, which is people with means will pay extra money to have more people involved in the process. Think about going to an expensive restaurant. The only difference from a caloric survival perspective between McDonald's and a Michelin 3-star is how many bodies are in between you and the source of the calories that you're consuming. Right? In a Michelin 3-star restaurant, you've got 16 people to serve 5 tables, right? At McDonald's, you've got 3 people to serve hundreds of tables. That's exactly what's going to happen in every industry as AI shows up and starts automating pieces away. Some stuff will get cheap and generic, and that'll happen really aggressively. And then people will pay up for having real experiences with real people that they develop real relationships with. Think about your doctor and the rise of personalized medicine, right? We have a boom in this country on off insurance private medicine because people are willing to spend a couple $1,000 extra a year to actually get an hour with their doctor instead of 10 minutes. I think you're going to see the exact same thing. It's going to become a status symbol whether you have a physical advisor, a human
advisor. That's a good point. So it's hard enough to predict what's going to happen in 3 months or 3 years, but let's just peer 3 decades into the future. Do you think that people will take advice from advisors in a very similar manner in the way in which they are today? It sounds like you think that is going to happen.
No, I think it's going to deepen. I think what you're going to, and I have mixed feelings about this, but I think what you're going to see is more and more advisors really become coaches. Right? There is a huge explosion in the quote unquote coaching industry right now. Which, again, I have mixed feelings. A lot of it is charlatanism. Some of it is extremely helpful, right? But both of those things are true. There are some coaches out there who I think change lives and help people build generational wealth. I think there are coaches out there who are really good at charging $500 an hour to make people feel good. But so, yes, both sides exist. I think good advisors are going to become more and more like coaches. My own relationship with my own advisor becomes more like a coaching relationship over time because they get to know me. They know my career. They know my family situation. So I'm no longer just asking dumb questions about, well, geez, how do I deal with this tax election? I'm asking questions about, well, does it make sense to start a pass-through business, or does it make sense to start my own LLC, or to incorporate, or to just, those kinds of things start becoming coaching decisions very quickly. So I think we're going to see good advice move more and more towards really kind of family office coaching models.
All right, here is the one big and obvious hole in the framework that I am suggesting, that it will be human-looking robots that replace us on the screen. Regulation. In order to deliver advice, human beings need to be certified. Now, it's not extraordinarily difficult to pass these exams, these basic exams, but there are definitely lobbyists who will fight against this, and I hope they do. But there it is. You can't give advice if you're not licensed. So.
Yeah, look, whether it's AI or whether it's crypto and decentralized finance or whether it's this, the legal structure is going to have to do a lot of catching up on a lot of the technology that we're currently running full steam ahead on. Of course, things like the best interest standard or fiduciary standards are going to exist in some capacity. We're going to continue to have people in there. Imagine the most egregious example is a power of attorney. Do you think we're ever going to end up with a world where a bot is going to get power of attorney over somebody? I think that's probably not going to happen in my lifetime. Yeah. So you extend from there. If we're not going to give a bot the ability to do POA work, the ultimate sort of legal representative, well, where are you going to draw that line? Is it going to be a fiduciary standard? Is it going to be, I'm just trusting it to rebalance my model portfolio on Tuesday's standard? I think those things are going to get really tricky. And I also think that it is much harder to create a vigorous AI system that leans on all of the appropriate rules and regulations perfectly, which it would have to. I think that's much harder than people think it is. I've seen some of the early attempts by our industry to really go at this. Morningstar's Mo is a really good example. They put a lot of time and energy into that. Resolve Asset Management also did an amazing job at like taking everything that's on side in their regulatory framework and trying to create a chatbot that stays within the boundaries. And I think they've done it. It's taken them years to do it, right? So I think constraining these things into legal frameworks is more complex than you think it is.
So you're not an advisor, but you have spent your entire career around advisors. So you are as good a person to ask as any. Do you think that it is a good time for a young person to be getting into the financial advisory industry?
Yes, absolutely. I think it is not just financial advice industry, but any industry where a human being is acting as an intermediary between another human being and a system is a phenomenal place to go get a job. That could be in medicine, whether nursing, being a doctor, all of those things. Those professions are going to change too, but the human being is going to be the interface between the system and the rest of the population. So any kind of human service, therapy, obviously, any kind of education. Everybody thinks all these jobs are going away. I don't. I think they're going to become AI supported very quickly, and they're actually going to be where a lot of the value ends up.
So what else? So segue, new topic. What else are you seeing on the future of advice, asset management, technology, anything that advisors touch? What are you excited about, or what are you scared about? What do you think is overblown? Like wherever you want to take this.
Specific to AI or just broad strokes?
Yeah.
I mean, so in AI, I think the most interesting thing right now, and I think this is important for financial advisors who are not high-tech folks necessarily to grasp, is that the future is going to be massively unevenly distributed here. I've spent the last month deeply in code, right? I've lived in VS Code for the last 6 to 8 weeks because I really wanted to learn a lot of these tool sets at like a grunt level. And what I've discovered through my own experience doing that is some things are now magically automated. Parts of coding that used to be really hard for me to keep up with are now just child's play. The big stuff, like how to structure a project, how to manage your Git, how to actually be a coder producing quality product, that stuff doesn't get automated. You still have to be a very good human being who understands what you want, why you want it, how you're going to use it, what the fail cases are, how you're going to test it. No AI can give you that set of information, that set of impetus to go do a thing. So what you're going to end up with is some stuff's going to look like, well, AI is going to do everything. And people are going to take that and apply it to all of these other functions, like we've been talking about, these financial advice functions, and just assume that because these tools are amazing at X, they're going to be amazing at Y. And what we're going to discover is actually those gaps are huge, right? There are things that it's great at that have no bearing on things that it's not great at. So let me give you a good example. The worst use case for an LLM out of the box is to ask it for tax advice, because 99% of the time it's going to be completely right. That's really dangerous because 1% of the time it's going to be very confidently incorrect. And you'll never know, because if you don't know all of it, how are you ever going to check the 1% that's wrong? I run into this when I look at regulation all the time. I've really tried, and I've spent thousands of dollars on the expensive AI models to do this. You cannot take, say, the 40 Act, the 33 Act, and all of the SEC interpretation letters and load that into a retrieval augmented database and say, great, now look at this new ETF prospectus and hold it up against this set of standards and tell me what's good and bad. Forget about it.
Not today, but not in 5 years?
I think that the boundary conditions are just too big, because the difference between Ed Bear at Ropes and Gray, one of the great lawyers in this industry, and a chatbot isn't that Ed knows more than the AI can be trained on. It's that he's actually lived through those use cases being adjudicated in real time. He sat there in front of judges while they're debating whether or not something is good or bad. He sat there across from SEC staffers and seen the looks on their faces when they talk about this piece of leverage or something like that. None of that ends up in the LLM. It can't, almost by definition, end up in the LLM. And the edge cases are always filled with those nuances. So I don't want to be negative and say never, 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 never. But based on what we've got in front of us now, I think the important thing is to figure out what AI is going to be great at and figure out what AI shouldn't really even be bothered with.
All right. So you're spending 6 to 8 hours, did you say a day or whatever you
No,
maniac?
like the last 6 to 8 weeks, the last couple of months.
6 to 8 weeks. Okay.
I've been deep in the, boning up on all of my coding skills that have atrophied over the last decade, specifically so that I can really use these models.
To do what?
Well, for instance, I'm taking the daily dump of all the ETF data available in the United States and trying to build a system to generate genuinely new and interesting insights from things like flows patterns or changes in expense ratio or changes in average daily volume compared to pricing, right? Using it as a sounding board for exploring those kinds of new ideas. Phenomenal, amazing. If you've gotten all of the data in exactly correctly and cleaned everything perfectly, and ETF data is a mess. That's part of the reason I started there, is because I know that data really well. So I can tell you how often it gets stuff wrong.
Okay. I love that. Last thing while I have you, anything on the ETF side that you think is interesting, nauseating, anything on your mind?
How much time we got? Look, we are very much in the Wild West, right? We are in the Wild West of ETF launches. Anything that can be filed will be filed, and pretty much the SEC is daring people to run the stoplights. So some things get to run the stoplight, like Priv from State Street, which is their big private equity ETF.
Oh, nobody cared.
Nobody cared. No money flowed into it.
No money. Yeah.
But they ran the stoplight, like, against the SEC's wishes. They launched. Rex Hospi tried to do that with their staking Ether ETF in the Cayman Islands, and they got the stoplight put down hard on them. But the point is, there's no rhyme or reason really to why one's going through and one's going not. So you can't trust as an advisor that just because a product got traded and listed, that somehow it's quote unquote okay. This is the time as an advisor to be very skeptical of new product, to be very skeptical of crazy promises around things like income or tax treatment. If it looks too good to be true, chances are it has not been fully vetted by the IRS and the SEC and everybody else, because that's just the culture that we're living in. That's the bad news as an advisor. The good news is the infrastructure remains as bulletproof as ever. I mean, we've been through so many tests on it that I honestly can't think of a more tested financial structure in history than the modern U.S. listed ETF. I think it's
I saw a chart.
Salad.
I saw a chart that you'd love. It showed bonds held on corporate bonds held on bank balance sheets versus corporate bonds in the ETF wrapper, and the ETF wrapper just surpassed corporate bonds held by banks, which is wild.
Yes. So like ETFs are just becoming the holding vehicle for all assets. Look at Bitcoin, right? I mean, ETFs are now the largest holder of Bitcoin in the world. I think they crossed Satoshi a while ago, right? So, okay, that's just where it's all going to end up. So anything that you can get into the ETF structure, the ETF is just going to elephant that. It's just going to take all the space in the room, because it's efficient, it's tax efficient, it trades really well, everybody understands the mechanics, the ARB works, creates just enough opportunity for the people on the street to make a bunch of money on the greed part of the arbitrage trade. So it's kind of this beautiful ecosystem that's really hard to see coming undone until someday when we actually get tokenized equity in the US. And I think that that's 10 to 20 years off.
All right. So Dave, I hope you're right. Your point is that advisors don't have to worry about being replaced by machines. I think that there is a chance that I don't know how to quantify, that in 30 years, maybe it's 40 years, maybe it's never, that robots are doing our work. I hope I'm wrong. I hope I'm not alive to see it. Most people that are watching today know your beautiful face. You've been around for a long time, but if they don't and they want to learn from Dave, I would encourage you to go to nadig.com. Dave, you're the man. Thank you so much for your time.
Thanks for having me.